Welcome to the INREM podcast, where we discuss the law for real estate investors. Andy and Sean are both attorneys. Nothing said in this discussion should be considered legal advice. We're simply providing information and education. You should consult with an attorney in your state regarding any specific legal issue that you may have. Hey, good morning, everybody. Thanks for joining us. Today, our topic is building a successful real estate business by being a go-giver. I'm Andy Fowler, and I'm here with Sean St. Clair. If you're new to this show, make sure to find us on Facebook or YouTube. Like and subscribe to the channel. You can find us on YouTube, that is, at INREM Podcast. That's at INREM Podcast. With that, we're going to go to Sean, who has our legal update for us.
Thank you, Andy. So our legal update today is the topic of equity skimming. So the question is what is equity skimming? So we hear it all the time. This thing that is out there called equity skimming, which no one wants to do because it is a criminal offense. But what exactly is it? What is equity skimming? So equity skimming is a crime. So it is a criminal offense, and it generally involves two scenarios. So the first scenario is where a property is taken subject to the existing loans, and the purchaser collects all of the rent from those loans, but fails to pay the existing lien holders or other obligations with respect to the property, and then the property ends up going through foreclosure. So they basically have they've rented the property, they've pocketed the rent, but they've not paid the obligations with respect to that property. The second involves purchasing property subject to the existing loans, and then refinancing the property or doing an equity line of credit on the property and pulling cash out, either based upon their own ability to qualify for financing or through some form of straw borrower. And they pull all the equity out and then they stop paying and the property forecloses. So let's break those down a little bit. So first, when it comes to collecting of rent, where a property has been purchased subject to, there's two types of statutes that apply. So the first is federal law, and that's 12 U.S.C. 1709-2, which applies to any type of property that's purchased subject to the existing mortgage loans on the property. And those mortgage loans have to be, for the federal statute to apply, those mortgage loans have to be federally insured mortgage loans. So federal law is only going to apply when the loans are federally insured. And so assuming you have an FHA, a VA, a Fannie Mae, a Freddie Mac loan against the property and you purchase it subject to, federal law is going to kick in. And federal law basically says that if you've purchased the property and the loan, the federally insured loan is delinquent or is in default and becomes delinquent or in default within 1 year from the date of the purchase, you're going to fall under the statute. And in that case, you cannot collect the rent and not pay the mortgage loan. So if you purchase a property subject to, and it is either in default or it later becomes in default under a federally insured loan, and you collect the rent and you don't use the rent to pay the lender, then you've committed equity skimming, which is a criminal offense under federal law, and you're going to be in violation of this statute. I'm going to read you basically the exact language because I want to talk about, thoughts on structuring, dealing with these types of subject to transactions. So basically it says if you fail to make payments under the mortgage or deed of trust as they become due, regardless of whether you're the purchaser obligated under the loan, and you apply or authorize the application of rents for your own use. So let's talk about structuring here of subject to transactions, right? So when you purchase a property subject to, there's three options for if you want and you should intend and mean to make payment to the mortgage lender to avoid, coming under this federal statute. So there's three options, right? There's the first option is to make the payments directly to the mortgage lender. That's probably the surest because the ability to make those payments sits with you as the buyer. And so you have the ability to make those payments. The second is to set up a loan servicer, and then the loan servicer should be obligated, and it should state in the purchase contract, or if you do a wrap, which I always recommend for subject to transactions, you do a wrap, it should be in the note that the servicer is obligated to take those payments and first pay the mortgage loan on the property. And then third, you have the ability to write checks to the seller on a wrap. So you can send it to the seller because the seller essentially is the lender under a wrap agreement under the note. And that note should say that the seller is going to make those payments to the lender. But what happens if they don't? You may have an issue here with the statute. So my preference when you're doing subject to transaction is either to make the payments directly to the lender or make them to a loan servicer. I never recommend, nor in my opinion, should you ever make the payments directly to the seller with the hope that the seller is going to actually pay the lender. Moving forward with the payment of rent to satisfy the mortgage loans when you purchase a property subject to existing liens, there are states, Arizona is not one of them that has a specific equity skimming statute, but there are states such as Colorado that have very specific statutes that address equity skimming, and in particular, the use of rents to pay existing mortgage loans. The Colorado statute is a little different than the federal statute because it does not require that the loans that are for which the property is being taken subject to be federally insured. So they could be hard money loans, they could be other types of financing, but they don't have to be federally insured. And then here's probably the most significant difference between Colorado and the federal statute is it also includes amounts owed to a homeowners association. So if you go and you purchase a property and the homeowners association fees are delinquent, or they become delinquent in Colorado, it's 18 months after the purchase, they become delinquent within that first 18 months, and you're collecting rent and you're not paying the HOA, that is considered in Colorado anyway, equity skimming, and that's a felony offense. So, it takes it a step further from, dealing only with federally insured mortgage loans to any loan plus HOA assessments and dues and amounts owed. So that's pretty, significant and something that, a buyer needs to watch out for. Hopefully there's no buyers, and, this, our topic, and you're going to get into it is about being a go-giver. So hopefully as a go-giver, you're not purposely trying to equity skim. But, you get in there and things happen, mistakes happen, you fail to make payments, those types of things. You want to make sure that you're not becoming sideways with either federal or state law. So any state that you're doing business in, you need to consult with a real estate attorney in that state. Make sure you know for sure exactly what you can and can't do with respect to creative financing subject to transactions. And then the final thing that I want to talk about, and I addressed it generally before, which is the idea of purchasing a property subject to, and then doing some type of later financing and pulling out the equity on that. There's no state or federal law that specifically addresses that, but state and federal law enforcement have used a statute that you can find both in the federal statutes as well as state statutes, which deal with schemes and artifices to defraud. And those basically prohibit any person from engaging in some form of scheme or artifice to defraud. And then there's also consumer fraud statutes that prohibit taking advantage of a consumer. And the basically the schemes that federal law enforcement has and even state law enforcement has pursued for quote unquote equity skimming is where a seller or a homeowner is in default. The buyer comes in and says, "Hey, I'm going to help you out. I'll bring the loans current. I'll purchase the property, or I'll take title to the property. You can rent the property from me. And in addition to renting the property from me, I will give you an option to purchase the property." So they give them an ability or make the claim that they have the ability to purchase the property. And then they go and either using their own credit, or they go and maybe transfer title to someone else who can obtain some form of refinancing. They go and they obtain refinancing and pull out all the equity of the property. And then once the loan is in place, equity is pulled out, they walk away, and the property ends up in foreclosure. And then the seller or prior owner who thought that they would be able to rent the property, who thought that they would be able to later repurchase the property, is out because it's foreclosed. And so they can no longer rent it. They can no longer basically purchase it under their option. And so they've used, law enforcement's used the general statutes dealing with schemes and artifice to defraud to pursue that type of equity skimming. So essentially that is when you hear equity skimming, that's what it is. And it's something to always be aware of when you're investing and working with investors, working with homeowners, with lenders. You want to make sure that you're on the right side of these statutes and you're not even unknowingly causing a violation or breach, because there are criminal penalties and they're fairly significant if you're ever convicted or charged with equity skimming.
All right. Thank you for that legal update, Sean. So today we're going to get into our meat and potatoes of our topic here today, the building blocks for a successful real estate business. And that is also talking about this concept of being a go-giver. And with us today to discuss being a go-giver is real estate investor Brandon Simmons. Brandon Simmons, as I mentioned, is an investor in real estate, works and has his own real estate investment practice. Brandon, thanks so much for joining us.
Hey, thank you guys so much. Appreciate it.
Yeah, Brandon, we really appreciate having you. So tell us about your real estate investment practice and how you got into real estate investing.
Sure. So I've kind of always been interested in real estate. I kind of give you a little bit of background. We moved to Arizona about 11 years ago. In 2009, I guess actually longer than that now. So we moved here 2009, 2010. I found a podcast called Flip to Freedom. And there's a guy named Sean Terry who is talking about wholesaling. And I signed up for the Flip to Freedom Academy. And at the time, it was like $97 a month. I put it on my credit card without telling my wife, and was really scared about that, and ended up being one of the best moves. My very first wholesale deal I ever did was a joint venture deal with Sean Terry. It's a crazy story. Everyone has those crazy stories. I mean, everything from a dying dog in the living room to a hibernating desert tortoise in the backyard. But that was my first deal. And then I was in the real estate world by doing mortgages. I worked for Wells Fargo Home Mortgage and did a couple of deals off and on while I was working there until I got laid off. And I took a job with another mortgage company And at this time, was several years down the road, Sean called me up and said, "Hey, Brandon, would you come work for me?" And at the time, I felt like I had a very good job. I called it the golden handcuffs, making 70, 80 grand a year, insurance. And I didn't really want to, take the risk. And I was talking to my brother. My brother's like, "You're an idiot if you don't take this opportunity. You've been talking about this for so long. You can do this full time." And so I went and talked to my manager, and I basically told them that I was going to be taking a position. They said, "Don't worry. If it doesn't work out, you always have a job here. You've been great." So I felt like there's really no risk. So I started working for Sean, and my first year as a W-2 commission employee, I made $175,000. So I was hooked. Fast forward a little bit. I worked for Sean for about 5 years, and then went out on my own and have been doing everything on my own ever since. I still do coaching with Sean, which we still do some joint venture stuff together. But I owe a lot of what I learned in the real estate and wholesaling business to Sean and several other of my really good close friends that are local mentors of mine that are really, they just try to stay off social media. They're like the guys, the millionaires next door.
So give us an idea. You've been doing this for a little bit now. You did mention wholesaling, but give our listeners an idea, kind of the breadth of real estate transactions that you've done in your journey. I'm sure it hasn't just been wholesaling. What
No.
does that look like, and what have you touched?
So I've done everything from wholesaling to some flipping, rental properties, creative real estate, seller carrybacks, wraps, lease options. I was really happy to hear Sean talk about the equity with the legal update, because he talked about how he prefers to do wraps on his subject to investing, and that's the only way I do subject to investing is I do wraps, and I use a note servicing company. I just feel like it's a better way to protect the homeowner and stuff too. But we've done wraps, we've done seller carrybacks, we've done lease options. Regular options, joint ventured with lots and lots of other investors. And so right as I left working for Sean, I started a small little mastermind with about 16, 17 people. We call it the REI mastermind, but everyone that joins the mastermind gets a copy of the book, The Go-Giver. And we have to kind of follow the precepts of that book. And that little Go-Giver mastermind, everyone calls it the Go-Giver now, has grown to over 200 plus members. And they're all top real estate gurus, investors. But a lot of time, whenever we started it, we were all we were all full-time, but I wouldn't say that we were at the level of experience that we're at now. So many have grown full-blown businesses, tons of employees. The owners of Batch Skip Tracing, Evo, Annie, and Jesse all met in the mastermind. You probably know a lot of the folks that have been through there, like Pace and Jamil and Jerry Norton and Sean Terry and Steve Trang and Brent Daniels. Lots of great people, and there's tons and tons more. And I'm really passionate about just trying to help people grow their business.
Now, I know that you're a pretty regular speaker. What kind of events do you have up and coming here in 2023 where you'll be speaking?
So I'm going to be teaching a workshop this weekend with Azaria, the Arizona Real Estate Investor Association. I'm going to be focusing on, they're doing a workshop on wholesaling, but the portion that I'm going to be speaking on is on creative real estate. So covering some basics like seller carrybacks and wraps, sub-twos, lease options, stuff like that.
Very interesting. So tell us about, I know you authored an ebook as well called The Cash Buyer Blueprint. Tell us a little bit about that and the topics covered.
Oh, cool. Well, my background is wholesaling, and with wholesalers, your biggest customer is a cash buyer. So I just shared in there, and a lot of people can get this stuff for free at my website. It's just brandontheman.com. basically where I just talk about the different strategies of finding cash buyers and the 5 types of buyers we need. The fix and flippers, the landlords, hedge funds, real estate agents, and actually, believe it or not, we think of it as competition, but other wholesalers. I've done a lot of business with other wholesalers, and I continue to do business with other investors. A majority of my deals come from other investors.
Brandon, you're doing the mastermind. You've authored a book.
Mhm.
You're speaking regularly. We're going to get into this idea of being a go-giver, but we wanted to, because we've just come out of 2022, and that was an interesting
Mhm.
year for all markets, but we talk about real estate markets
Yeah.
specifically here. What do you think 2023 looks like for real estate?
I I have opinions on this. So, we were just at we had an Azaria meeting yesterday, the Arizona Real Estate Investor Association. Tina Tambora from the Crawford Report was there. And I really respect what the Crawford Report talks about. They're talking 5 to 7 months of kind of a slower market, balanced market, still a buyer's market, and then they think it'll kind of come back up. I was an econ major, so my background is economics, and I really love the statistics of everything. So I really do believe that the housing market is so much connected with what the Federal Reserve does. So if the Federal Reserve is printing money, then we're off to the races. If the Federal Reserve is doing what they're doing right now, called quantitative easing, like where they're raising interest rates, it slows down
Design
the housing
destruction of the
market.
economy.
Yeah, so to speak. Yeah, I mean it's crazy because, um, it's frustrating because I'm not one of the federal economists on these boards and stuff, but to me, it's not that hard to understand that we weren't in a transitory inflation period. They kept talking about that for months, and then now I feel like as they're raising interest rates, they're playing catch up. I think they were a little slow to start that. And I believe they do have to manipulate that, money supply and stuff like that. But I think it's hurting a lot of families right now with inflation.
So it sounds like your approach is you hear this just in investment strategies generally, but the term "don't fight the Fed." It sounds like where the Fed goes is maybe where real estate goes, is what you're thinking.
It does. I think there is a correlation there. You know, if you understand what's happening and you understand what's happening in the near future, I think we can only anticipate about 6 months at a time. It's really hard to look in the crystal ball and go much farther than that a lot of times. I think it depends a lot on politics. It depends a lot on employment and stuff, other factors too. But I feel like that if you understand real estate, you understand creative financing, you understand the different strategies that are out there, that you can make money in any market, an up market, a down market, sideways market, it doesn't matter. In fact, I'm actually excited that is becoming a buyer's market because there's going to be a lot of opportunities to buy a lot more creative deals.
Yeah, for sure.
For
A
sure.
few weeks ago, we had a show just dedicated to diversity in real estate strategies, in order to deal with the different markets, because they don't all, as we discussed with that guest, fit within a boom, and they don't all fit within a bust type of cycle. Having the ability to diversify and be there. And I would imagine,
Mhm.
kind of given when you started, because you mentioned coming out of 11 plus years ago, you kind of got into this coming out of the last recession or right in the middle of it. So you've had
I,
a cycle where you've seen a good bit of all of it.
yeah, I think I was lucky. We bought our house out here um, right after the collapse. So the house we bought for 50% of what it was listed for the year before. So I think we bought at the rock bottom, just by dumb luck. So I have only known up market, but I have a lot of friends that have been around for decades that have seen the ups and downs. And honestly, I lean on them for their advice. A lot of them got out of a lot of their rental properties a little early, cashed out, took some chips off the table. We're bored playing basketball at LA Fitness or doing yoga, and they're sitting on stacks of cash ready to buy, so.
Well, that's the great thing that I've found, and I think you mentioned this earlier, in your mastermind with the real estate community. It is in a sense, I'm gonna use the term, but I don't mean to just mean for men, but a brotherhood in a sense of
Yeah,
pretty generous folks that wanna help people, both network and do well, and what you find is, you find folks that have been through it before, been through the down cycles, know how to maneuver through that, and so let's talk a little bit more about kind of what you mentioned in your mastermind specifically, but this idea of a go-giver. So for our audience, give us a definition of what a go-giver is or what it should be.
sure. So it's from the book The Go Giver from uh, John David Mann and Bob Berg. It's an easy read. You can read it. It's like 120 pages or something. It's a fictional story, but it applies principles about looking to serve others first before, we always wanting our own thing, and there's a part for that. There's a reciprocity as part of the values and the rules in there. But first, we got to learn to serve first, and then we will receive. And not only serve, but serve as many people as we can, as exceptionally as we can. The more people we serve, the bigger our network becomes. The better we serve them, the more money we can make, and being open to receiving whenever those opportunities come. In that mastermind, every single person has done a deal with someone else in that group, and every single person has. I mean, you can interview pretty much anyone in there. You can see that they've all have had some sort of benefit to their business monetarily or in some other value, um, unequivocally. Like everyone says it, Pace, so many people have benefited. I've benefited. I created the group for that benefit so we can kind of share. But I think it does help picking the right type of people to join a group like that, because they're willing to help. They're willing to kind of open up their office to letting their competition come over and see what they're doing, which is so counterintuitive in a lot of business today. But a lot of times when you collaborate and help each other, your business actually benefits because of it.
Well,
So,
yeah, it's an all boats rise with the tide,
yeah.
kind of thing, and, I have a bachelor's in business, and I think of all the things that I didn't learn in business school that I learned in just doing. And when you put together the collective wisdom of those that have done and those that have failed along the way, you can't even put a price on that, I don't think. So give us an idea, what are the traits? What are the traits that you look for in a go-giver or that you try to cultivate in really training somebody to be a go-giver?
I think a lot of it's inherent. I think I look for someone whenever it is kind of like a fraternity or sorority, I guess, where I don't let anyone just come in and join. It's either I pick who's going to join, or someone in the group recommends someone else in the group to join. It's really that simple. I've never have charged for it. It's never something that I've, have required dues or anything like that. We have some sponsors that have helped out and covered like lunches and stuff like that. American Titles helped us a lot. But I would say that the people have to be willing to be open to answering questions. A lot. The format is we usually have a speaker talk about what's working in their business, what they've learned over the last couple of years, maybe they've had some bumps and bruises along the way. They share some of that, and they share what's working now. We have a little Q&A session, and then we kind of go around the room and we talk about what's working now in our business and what we need help with. And being vulnerable to asking for some help is also part of that too, because that's where we'll a lot of times we'll live stream to the members of the group, but whenever we go around that part of the group, all the cameras are off. It's 100% confidential, and it's all kept in the room because people may need a new business partner. People need to fire a COO, and maybe they're looking to hire someone else. So there's some confidential things in there. They need to be able to feel like they have a safe place to talk about their problems and to be vulnerable, so we can actually give them the help that they need.
How does this, I'm curious, I'm not suggesting that they don't benefit, but as like a new real estate investor, let's say, that's coming into the space, I hear this and I think, wow, I mean, this is amazing. I would pay money for this, but just for the opportunity to be able to learn from some of the best. But for those who have made it, those who have done it, what is
Yeah.
some of the biggest benefits for them to participate in that? Is it just growing, continuing to grow their network? What does that look like?
That's a great question, because for some people that have been in there, it's not as much of a benefit for them in their eyes sometimes. It's like they're the ones that are given value, and they're not getting something in back. And that's not right either. I want them to receive value. What I have learned personally, whenever you're open, I feel like we can all learn from each other. There's been times where a new person has come in that has a limited amount of experience compared to others, and they're sharing a new marketing technique, a new strategy that we never even thought of. And now all of a sudden the attention's on that person. Like, how does that work? What are you doing? And this is a person with considerably less experience, not near as many deals, but now all of a sudden they're benefiting the more seasoned pros because they're sharing something that actually is working for their business. Um, and a lot of it is repetitive. There may be some stuff, sometimes you feel like you learn it all and that's it. I think there is a way to scale up. And what happens though too is not only in that meeting, but you're building relationships, and you can go have lunch with several other folks that are maybe closer in your circle of level of experience. And so you can kind of build those relationships, and that has happened. And I think there's a benefit for a person that has maybe not as many deals or as many skills come, and the benefit could be for people that are super experienced, people like Jerry Norton that has come in, people like Carlos Reyes and Sal Shakur, they've come in, right? And I'll give you one example is Carlos Reyes and Sal Shakur have done hundreds of deals. They're multi 7-figure business a year in wholesaling and fix and flipping. But being part of that mastermind, introducing them to a couple people that happen to be lending partners now of theirs that are funding a good portion of their business. So sometimes you don't realize who's sitting next to you in a room like that. There could be someone that has, seven figures in their checking account willing to lend it to you, but you don't know who they are because they're not maybe doing as many deals, but they have all the cash. So I think there's ways to mutually benefit everyone.
So we've been focusing kind of on the networking benefits here of being a go giver, but you've built your own real estate investment portfolio. You've really built your own real estate business. What does this look like to integrate, and have you integrated the idea of being a go giver kind of within your own business? And what can companies do to build in such a way that they accept some of these premises of being a go giver?
So I learned by example. So Sean Terry is someone that I learned wholesaling from, right? And he's a big speaker. He's a guru. He's the godfather of wholesaling. A lot of people call him the godfather of wholesaling. He's helped a lot of people nationwide learn wholesaling. But I used to just go and meet with Sean at a Paradise Bakery with me and like 7 or 8 other guys, and learn how to write yellow letters and what type of people or what type of list to target. And Sean would just meet with us for free. And the idea was we go out, we get some deals. My first deal was the deal that I did with Sean Terry. I did multiple deals with him, but I remember my first deal, I had no cash buyers. I didn't have a list of cash buyers yet. He had over 30,000. We split the deal 50-50. He benefited and I benefited. And I think whenever you are one of the things about Sean is he's always been the example of giving away information, sharing what's working, helping out people, spending a few minutes after a meeting to talk and answer questions. And that has always catapulted him to more and more success. Whenever I worked with Sean, I would say 20 to 40% of our deals would come from other investors, joint ventures, collaborating with others. So don't be afraid to share information. Don't be afraid to give away the secret recipes, so to speak. Sure, there may be proprietary information that you want to monetize on and stuff like that, but there's usually a way. If you think about Jerry, he's a go-get. He puts so much information out on YouTube. Pace too puts so much information on YouTube for free that people would pay to buy a course from, but he's giving away for free. And then guess what? Deals are sent to him, multiple opportunities. So if you're a business owner, I think the biggest thing you figure out who you can collaborate with, make very compelling content to help them in their business, and just give them opportunity where they know how to contact you or to reach you. And so that's how I've done majority of my deals last year.
So how do you, we're talking, you used the word a couple times, collaboration. There's an obvious tension in the business market with a similar word, which is competition. And it's a competitive market, right? You know, everybody wants to get a deal. There's so much real estate. How do you balance this idea with competition versus this idea of collaboration? Or is it really just showing by example and hoping people see the benefits and follow
that? I think there's such an abundance. It's like saying there's only so much water out there, and I run to the ocean to grab 5 gallons for myself and thinking there's not enough to share. That's ridiculous. There's so much more water out in the ocean. I just got 5 gallons of water. That's all I needed, right? Maybe I have 2 5-gallon buckets and I'm grabbing that and I'm running back to the house for that. I think there's so much opportunity, so much abundance of deals that that's short-sighted thinking. And the moment that you stop thinking like that and you start opening up the idea that your competition is your friends that you can collaborate with, you can partner up with on deals, it has changed industries. It had not only in real estate, but I think in other businesses, you can see where people have found ways to work together, and it's a synergy, right? 1 + 1 = 3, because there's some sort of synergy that's provided whenever people kind of put themselves together. Now, I'm not saying don't be a sucker. Don't be the only person that's giving. That's a one-sided relationship that's just bound to failure. And there are people, I've had people that have just come and try to get information or try to, ask for my help without any type of reciprocity. They're not going to give reciprocity, so that relationship doesn't move forward.
Well, that just sounds like
I
a
think
taker.
It does have to be a two-way street. And there are takers. There are takers out there. They're greedy and they're one-sided and it's short-sighted, and they're going to miss so many opportunities because of it.
Brandon, we've talked a lot about collaboration, working with other investors, and Andy and I have we run our law firm, and we have a number of attorneys and things like that, and we try to collaborate with other attorneys. But one of the things that we try to work with our staff is, how can we give back to our clients? How can we serve our clients? And I've heard stories of investors who have contacted a seller and talked to him about their real estate situation, but then all of a sudden the seller starts spouting off about medical issues and this and that, and these investors have gone over and above, regardless of whether they were going to end up with the transaction or not, but they basically went over and above to connect the homeowner with different services unrelated to real estate, or even, drive them to places that they needed to go because they didn't have transportation, or wherever the case may be, with
Yeah.
no expectation that they would ever, land the transaction. Um, and I know that you've, done those types of things, but tell us some of those stories that you've heard where investors have just been not so much amongst each other, but as to the actual, homeowner or potential, client, where they've gone over and above, unrelated to real estate.
Mhm. So my very first deal, I'll share one with that, and then I'll share another one. So my very first deal, it was a single mom, two teenage boys still in school, and she needed to move out of her house. She got the money. We bought the house already, and I had to take the day off of work to help her move because she had no help to help her move. So we helped her. She didn't have an apartment. She didn't have anything. So Sean and I were doing the deal together. Sean came over and he brought over one of his other employees, and Sean drove her over to go find an apartment, sign the lease. We started helping move furniture over to the new apartment. Sean was setting up like the TV and the cable box and hanging up pictures. And she had a dog that literally was on this deathbed, like should have died, was already smelling like it was dead. And she didn't have the heart to bring it to the vet. She asked us to go put it down. So we drove her dog to the vet to go get it put down, which is crazy. After we got the place all moved out, the animals over at the new apartment, she had a couple other cats and stuff. We found out there was a tortoise in the backyard that was hibernating. I mean, not just a little one, like one of the gigantic desert tortoises. So we called the zoo, and they brought a herpetologist over to come and remove the tortoise and rehome that. That's just one example of taking the day off of work, helping someone move, getting everything set up, taking care of the dirty work that they didn't want to take care of emotionally. Another situation was a fellow passed away. The brother owned the properties. He lived out of state. They didn't have enough money to pay for the remaining cremation funeral services. So we went and paid for that. And I didn't know this, but in order to ship human remains, you have to use the US mail. You can't send it like FedEx or anything like that. So we sent the remains to the brother because he didn't have the money to drive out to Arizona from California. There's things like that happen all the time that not only I've done, that other investors have done, and it's usually figuring out what really is what you can do to help people is really what makes the difference. The biggest one that probably stands out is there was a lady, nice elderly lady, didn't have money for her pain medication for her hip. And the only money they had coming in, besides, like, she had some Social Security, her son lived with her, and he ran out of gas, had no money for gas to go to work. So without even asking, this is when I worked for Sean, without even asking Sean, I just run to the ATM, I go get some cash out, give her some money to go get her pain medication, give the son some money to go fill up his gas tank. Whether we bought the house or not, we were doing that. It was just a given. So I think you got to think like that. Like, just be a human being. I don't know. Just be, the golden rule.
Well, and that's the thing. I found that, there's kind of two types of investors out there. There's the investors like what you're describing, where you go, you're looking to basically you're trying to make a profit and feed your family and, make a living and that type of thing. And we all are doing that. But at the end of the day, you're looking for how can you come in and help this person in this situation, even if it doesn't relate to the real estate. And even helping them with respect to the real estate. And then there's other investors out there who aren't doing any of that. They're just looking for a quick buck. But I found that the ones that are the most successful, the ones that you've talked about in your mastermind, are the ones that are doing exactly what you described, which is they're, looking to help the homeowner first and then figuring out the transaction later on. So that's awesome.
Yeah.
The
word I use for that, you probably heard it, is altruism. Altruism.
Yeah.
Seeking out the welfare of others first.
Right.
And usually my students that I've coached, whenever they're stuck. They're usually just focused on them making money. They haven't made money. They haven't done a deal, or they're struggling to get the next deal. If they flip the switch and focus on just that importance of, I just want to serve someone today, I just want to help someone, then all of a sudden the deals start flowing in again. For sure.
Yeah, it's amazing how that works, how things kind of come full circle. And I was at a seminar or a networking event or something, but you were one of the speakers, and it was dealing with different types of marketing to, grow your business. And you had people who door knock, people who SEO and send out mailers, hard, US mail. And then they came to you and you're like, I don't do any of that. And I'm like, what? You're like, I don't market. I none of that. And you said, watch this. And you literally walked the room talking to investors in there. And you ended up with like 3 deals before the night was done. Talk to us a little bit about how you've built your business doing that, because essentially what you're doing is you're collaborating. You're looking for how to benefit, mutually benefit with another investor, with a homeowner, and make a transaction happen. Talk to us about how you built your real estate business doing that type of, those types of transactions.
Awesome. Yeah, thanks for that question. The biggest thing that I think of is, one of my mentors is Claude Diamond. He talks about attraction marketing. You may have heard of magnetic marketing. And this is something I'm still working on, is not being a secret. I'm trying to put myself out there more, hence like a podcast like this. So not being a secret is part of it, but realizing that they're opening our eyes up, that there are deals everywhere. And if you know how to put a deal together, then you can monetize on that deal. And most people are totally fine with you getting paid something if you can connect to a buyer and a seller, if you can connect a wholesaler and a cash buyer, if you can connect a tenant buyer with a landlord that has a lease option property. Most of them are totally, and a lot of times they don't know how to get to that next step, or they don't know how to make that connection. So being the connector can be very lucrative. You don't even have to, like, some people feel immoral if there's too high of a charge, on something. That's fine. Don't charge that much, but just have higher volume. One of my good friends that's here in Gilbert, Arizona, his name is Spencer Caldwell. And he wholesales. He works with a lot of wholesalers, helps bring a lot of cash buyers to a lot of wholesale deals. And I think he does a lot of volume, and he doesn't charge much. I think he charges like $1,500 to the cash buyer and maybe $1,500 to the wholesaler, where most people won't touch a deal unless they're making $5,000 or $10,000. But if you do a high volume, then you're doing fine. You're making plenty of money. So there's deals everywhere.
Brandon, did you have a point? Was there a point where this go-giver concept was a light bulb moment for you in your history and career as a real estate investor?
So here's how I'll give you I haven't told this story, I don't think, to anyone, how I came up with the concept of the go-giver mastermind. I actually got laid off from Wells Fargo, and in between being laid off and finding my next job, I had some severance pay, and I went to go work for a friend of mine who had a marketing company. And the idea that with his marketing company was business to business marketing. I had to go meet with different businesses to sell the service that we were providing. And he suggested that I go to something called BNI, Business Networking International. And in these BNI meetings, you pay a monthly fee and you have to attend every meeting to be part of this. And the idea was every person gets up and gives like a 1-minute commercial about their business and what they do. And they have everyone from like an accountant to a house painter, to a realtor, to a mortgage broker, a bookkeeper, just different variety. It's not niche. It's just a variety of businesses. And then the idea is you need to try to figure out how to give referrals to people in your referral network. How can you help them? The focus wasn't on your business. Your focus was, how can I help their business? How can I, if I'm talking to someone, how can I recommend them to one of my friends in my networking group? And I also read the Go Giver book, and it aligned with that. I saw Sean Terry do meetups, and we would do meetups and have lots of referrals and joint venture deals. And Sean would just teach the newest marketing technique he was doing, the newest yellow letter that he was sending out that was getting lots of attention. So I saw examples of people just giving. And so when I put the networking group, when I put the mastermind together, I wanted to find people that were willing to help each other. I wanted to follow the principles of the Go Giver book. And that BNI networking meeting was the idea behind that, was how can the people in the group help other people in the group? And that was the main focus. And that's how the Go Giver mastermind was born. Out of that.
Very
It's REI Mastermind, but everyone calls it the Go Giver. So I don't want to take anything away from Bob Berg or John David Mann. So.
Yeah, Andy and I actually have been Andy longer than I have, but members of different BNI chapters. So Andy's been in his for, I don't know, what, 15 years, Andy, something like that.
Yeah, a little, maybe 13, 14 before, not in it currently, but yeah, I had a lot of experience with BNI, and the idea, of course, what BNI's term was that they use for it is the giver's gain, but the idea of giving first, right? It's so yeah, definitely familiar with that. I'm curious too. Has it been your experience that those who come into the real estate investment community with an ultra competitive mindset, competition first, me first kind of things, is there a tendency that they kind of excise themselves from the community, or kind of hurt their ability and access to it? Or they kind of identified fairly quickly?
Well, what's interesting is, so most of the people that get in, they're entrepreneurs, right? They're competitive, they're ultra competitive. It's all about win, right? And what happens is we get in the mentality that I have to win. In order for me to win, you probably have to lose. And the concept of this is it can be a win-win solution, like the Stephen R. Covey talks about, right? In the 7 Habits of Highly Effective People. You can create a win-win atmosphere where both parties win. And what's interesting is, whenever we've had people from Texas, we've had people from Florida, people from out of town that have come to the mastermind, that flown in and were a guest of one of their friends. And they're like, we don't have anything like this in our hometown. We have so much competition. I don't think we can get anyone to work together. But what happens whenever they set foot into that meeting and they see everyone talking to each other, that they've been at each other's offices and met their staff and have helped each other out, it almost is like an epiphany that happens. It's like an enlightenment, like all of a sudden, like, wow, I can actually do a lot more if I'm not stuck on this idea that I have to keep everything close to the vest. I can be open, I can be transparent, I can help others, but then I can be open to the reciprocity of them helping me as well.
Sure. Well, Brandon, thank you so much for taking the time to be with us. We really find this idea of being a go-giver not only interesting but valuable, and appreciate taking the time. How can our listeners connect with you? How can they find you online and otherwise?
My website's brandontheman.com. It's pretty original. So is it brandonman.com? I'm on Facebook and Instagram and stuff too. I answer my own phone, so my phone number's on there. If they call or text me, it actually goes to me, not to some voicemail or service or anything like that. So,
all right. Well, thanks again for joining us, Brandon the Man, Brandon Simmons. Look forward to doing it again with you. Have a good one.
Thank you guys.
Brandon.
Appreciate it.
All right. With that, everybody, thanks for joining us. Join us next week. We're going to be talking subject to transactions. We're going to be working through some more minute details of subject to transactions with Texas attorney Scott Horn. Make sure to be with us and join us then. Look forward to seeing you then.
Have a good day, everyone.